One key part of being an investor is to always do your own research before putting your hard-earned money on the line. Whether you are a new investor or have been investing for a while, watch until the end of this video because we will be highlighting some major red flags in companies that should make you think twice before investing. Welcome to Wealth Gambit. On this channel, we cover the latest stock trends and news. Whether it's a deep dive into the fundamentals of a stock or breaking news, we cover it all here on this channel. If you guys like that type of content, don't forget to like and subscribe to get notified as soon as we drop new videos. Also, please note that we are not financial advisors, so please always do your own due diligence. Also, we just recently made our social media pages, so be sure to follow us there for more stock news, market updates, and most of all, some dank financial memes. In this video, we'll go over the top 5 sketchiest companies in the stock market today that you should probably think twice about before investing, or if even worse, you are already invested. Let's start with the most obvious, Nikola. We're sure everyone's heard of Nikola by now, but just a few months ago, we made a video on one of the biggest frauds of the century, Trevor the snake oil salesman Milton. T. Milton was at one point the CEO and executive chairman of Nikola Motors. Now this is where it gets interesting. According to a federal grand jury, Trevor Milton was lying about quote unquote nearly all aspects of the business.
I knew you was lying, man.
This is why, in our opinion, anyone who's not trying to commit financial suicide should stay far away from the stock. It's no secret EVs are the future. Startups and legacy automakers are plowing billions of dollars into the space now. Nikola started this race, tripped, or rather rolled, get it? Because they rolled their vehicles down the hill to make it look like it was working. Anyways, basically they're so far behind that there would probably be a better chance of winning the lottery than them ever catching up. Up next, we have an OG in the cell phone game, Nokia. Do you feel nostalgic? You're getting old. Nokia was once a mobile giant, at least decades ago. In 1865, Nokia was founded in Finland, and the company actually enjoyed many periods of unrivaled dominance in the mobile industry. Nokias were reliable, durable, and dang near indestructible. In fact, look at this video of a Nokia phone getting shot by a 9mm bullet and not even cracking the screen. My iPhone could literally never. Unfortunately, although their phones were bulletproof, their business was not. Nokia failed in several aspects of its business, marketing, and keeping up with the fast-paced cell phone industry. Apple and Samsung innovated too fast and Nokia unfortunately got left behind. Like what Peter Drucker said, marketing and innovation make money, everything else is a cost. Obviously, exposure to technological disruption is a huge red flag, so make sure that whatever you're investing in, that it isn't in an industry that can be disrupted, or is the one doing the disrupting. Up next, we have Lumen Technologies, aka CenturyLink Inc. Formed in 1930, this telecommunication company provides a wide range of communication services to residential, business, governmental, and even wholesale customers. But it looks like it's a tech stock to avoid. The company incurs the cost of owning a 250,000-mile US fiber network and a 300,000-mile international transport network. CenturyLink earns about $500 million a year. But as the world explores other alternatives, customers of CenturyLink are now switching to wireless networks, increasing the need for 5G, which is eating into the need for fiber networks. And looking at Nokia, when a business fails to adapt, it gets clapped. Shouts out Socrates for that fire quote. CenturyLink has in some ways tried to adapt, but by moving into cloud security and managed services, which seems to not be working out for the business. Last year, the company rebranded to Lumen Technologies, giving hints as to what the company plans to do in the future. But will it be enough to drive it back to long-term profitability, or is it just a band-aid on a much larger problem? One thing's for sure, we don't intend to stick around to find out. Another company we'd like to highlight is Paycom, not to be confused with PayPal.com. Paycom is a comprehensive HR and payroll software company that is based in Oklahoma City. Last year, Paycom insiders reportedly sold $15 million worth of the stock, and its chief financial officer, Craig Boelt, made the biggest sale. Craig Boelt reportedly sold $12 million worth of Paycom shares at a price of $483 a share, a price which was way lower than its stock price when it was around $536 a share. Insider selling can mean many things, but a lot of insider selling is almost never a good thing. That's not all. If you take a look at its insider transaction on Yahoo Finance, Paycom management has been selling their shares this year. In their Q3 2021 results, Paycom reported total current assets amounting to $3.3 billion and a total current liabilities amounting to more than $3 billion. If you do some math and calculate Paycom's abilities to pay its short-term debts by getting its current ratio, you'll get a current ratio of 1.07 to 1. This means for every $1 of debt Paycom has, the company can pay an equivalent of around $1. For a company that has pay in the name, it doesn't sound like they've been doing a good job of getting paid themselves. Paycom's management going on a selling spree right as the company undergoes this massive rebrand and pivoting doesn't necessarily invoke a lot of confidence. Last up, we have Penn National Gaming Inc., a company that owns and manages gaming and racing properties and operates video gaming terminals. Last year, investors thought of Penn Gaming as a giant online gambling company to beat. Speculation caused its stock price to surge 238% during 2020. It partnered with Barstool Sports in February 2020 in order to expand its exposure in online sports betting. Barstool was the key to bring Penn Gaming the name recognition it was aiming for. Take note that Penn National Gaming is competing against the likes of MGM Resorts, DraftKings, Flutter Entertainment, and the downside, however, is that although Penn Gaming is just entering the space, its competitors have been in the space for a while, and as a result, Penn needs to play catch up.
Take a seat.
As casino goers weren't able to go to physical casino venues, they had to resort to digital ones, aka online gambling. These factors played a huge role in the surge of digital gambling in 2020, making investments in a gambling company seem like a good idea. Penn National Gaming stock doesn't seem to be performing well these days after reporting its Q3 2021 results last November 4th. Its stock price fell 21% by market close, which can be attributed to its reported adjusted earnings per share that went below the estimates of major analysts. On top of that, there was the Barstool CEO David Portnoy scandal. As lockdown restrictions ease up and people are now able to go out, the online gaming business as a whole seems to be slowing down. Some companies grow exponentially in certain periods of time under certain conditions. But what happens after those situations have passed? Well, we're not financial advisors, and this is not financial advice. You might want to reconsider some of these companies if they are your investments. Times are changing at a faster rate than ever. Back in the day, if you wanted to communicate with someone on the other side of the world, you would have to send a physical letter by mail, which could have taken weeks, maybe even months. With the advent of technology, this has reduced to seconds, and so has the speed of change.
You hear that? It's the winds of change.
Companies not prepared to adapt at the speed of thought are getting left behind, so be careful out there. To re-mention the Socrates quote, adapt or get clapped. Never forget, R.I.P. Pac, R.I.P. Biggie, R.I.P. Socrates. That about wraps it up for today's video, guys. What do you think about these companies? Do you have more in mind? Let us know in the comments below what companies you think should be avoided at all costs, and best comment will get shouted out in next vid. Until next time, peace.